Hello everyone, welcome to this webinar today where we're going to look at retail pricing calculator. It's within ESS BIZTOOLS. I'm Peter Towers, Managing Director of ESS BIZTOOLS. Thank you for your support of ESS BIZTOOLS and ESS BizGrants. We do really appreciate it. If you're located in one of those areas that's suffering from the lockdowns, we are thinking about you. And we hope that it won't be too long before you'll be back in full swing in your accounting or business advisory firms. So today I'm going to give you an overview of this product package, which is within ESS BizTools, and show you how you can use it to help your clients. If you have any questions, can you type your question into chat, please, and I will answer it during the webinar. But if you're watching this recording at a time more suitable to you and you have a question, please send me an email, peter@essbiztools.com.au, and I will get back to you. Composition of retail or a wholesale business, because they're obviously very similar. Obviously, we start with the products that are going to be supplied, who they're coming from, what are they classified as. And it's important that accountants who are going to be offering a broader range of services understand how this all flows into your client's business. All stock is not the same. So every business, I hope, has got some star stock that they're going to be selling. These are great products that every retailer would like to have their whole store full of them. But unfortunately, that's not practical in most situations. Businesses need other types of stock besides the stars. And the probable lines are last year's fashions. They're causing some issues. Cash cows are products that you have to have because customers come looking for them. But you couldn't run a business just relying on the cash cows because there's not enough markup. There might be enough volume, but there's not enough markup to cover the overheads and wages of the business. And sludge, well, these are products that you wonder where they came from. The business really does not want them. It's low volumes, low margins. Who bought them? So accountants need to develop a knowledge about the product composition that your clients have. What are the star categories in their store? What are the cash cows? What are the problem lines? And what are the sludge items? And hopefully you don't have to know too much about sludge because your clients might not have them. That's wonderful. But let's look at what they are. The stars are high sales value with high margins. High down here, margins up there. So high margins. They're great to have. The cash cows are high sales value. You sell a lot of them, but it's a low margin. The problem lines are low volumes, but higher margins. They're probably last year's fashions. Last year, ladies wore red. This year, they're wearing yellow. And you're going to have to work hard, or your client's going to have to work hard to sell them. So perhaps in your advice as the financial advisor to your client towards the end of a year should be, well, we don't want to be left with all these yellow garments for next year or whatever they are. Let's try to move them before we get to the end of the year. So we can still say they're this year's fashion and people will still buy them, hopefully. So they're the items, low sales in volume, but still relatively high markups, but you might have to have them discounted a bit. Otherwise, they might sit in the store for a number of years. And it might not only be color fashions that changes, then it might be just what the garment looks like or what the product looks like. And this could be not as dramatic, I suppose, in furniture and as what it is in fashion, but it still changes. And then we have the sludge. These are low sales values, low volume value, and low margins. So you'd wonder why anyone bought them in the first place. It does happen. And one of the problems that can occur in a business is that they've got automatic reorder systems set on their computers. And someone's worked very hard to get rid of 36 particular items that were ordered that just didn't work out. And no one orders these things thinking they're going to be sludge items either. They order them thinking they're going to sell them. They're thinking they're going to be stars. But unfortunately, the market doesn't agree. The market's won't agree to pay the price that would make the product a star. Or it's basic as the market doesn't like the product and won't buy it. I had a fairly large jewelry business as a client for many years. And I was sitting in the boardroom doing my work one day and I heard this loud noise and I knew the voice. And it was the top manager that they had in that business. And he was not happy. And a few adjectives flew out of his mouth. And I went outside and I said, "What's wrong with you, Jim?" I never heard him carry on like that, not in an office. And he said, "I have worked very hard, and my team has, for 2.5 years to get rid of this particular product." And he had a photograph there, which he showed me. And they were a product that they originally purchased for $300 odd that they were going to mark up and sell as star items, and they couldn't literally give them away. They'd finally got rid of most of the 36. I think they still had a couple left. And then he gets another great carton or great container turns up, and it's got 36 more of these things. And they're huge vases, made in Italy. Very spectacular if you like that sort of stuff. Obviously, the customers didn't. So he had another 36 to sell. Why? Because there'd been an automatic reorder put into their computer system on everything. So when they got down to a certain level, they reordered, even though it had taken 2.5 years of pretty hard selling to even get down to 30 or whatever was where the reorder clicked in. So make sure your clients understand that. They've got to be careful about these things. If they are sludge, we need to get rid of them, and we need to make sure the computer programs have been changed. Otherwise, you might find they've been reordered, which is a real pain in the neck. So let's look at the rest of what goes into a business. We have a team. You have a manager, assistant manager, retail assistants, casual workers, part-time workers, full-time workers. Their working hours will vary. Their remuneration obviously varies. Their holidays may vary. And the labour on cost will be different. Your client may have agreed to be paying, say, a manager an extra week's annual leave because he has to come in occasionally over the weekends to see what's going on, or he works the weekends. Might be the busiest time. And perhaps your client's paying the manager a bit more in the superannuation percentage instead of 10%, 12%. So those things can vary, and they need to be taken into account, because what we're trying to set here is what profit does this business need, and how is that going to be reflected in the retail prices. The overhead expenses need to be calculated, and these could then be included in the budget. In fact, information out of this whole process could then be inserted into the predictive accounting reports for the business, looking to project what the budget will look like and what the resulting profit's going to be. What's the targeted profit? Now, in our system, we make allowance for it to be calculated as a percentage of the investment in the business. So if you said, okay, the business has got an investment value of $500,000 and we want a 20% return, that's $100,000 or 25%, 125,000 or whatever, or you can just slot in a figure. You'd like a $200,000 profit. That's what the owner has told you. And that's then what the whole system's got to work towards generating, at least that figure over a 12-month period. Let's look at the marketing selling dilemma that your retail clients have got. Most retailers can not only sell star items, even though they might like to do that. Most also need to sell these cash cows. Remember, they're fairly high volume items, but a low markup. In a corner store, it's things like milk, newspapers, bread, that type of product. So most businesses need to be able to sell more than the cash cows. Those cash cows, you might sell a lot of it, but you probably won't generate enough margin out of that, gross profit margin, to cover the wages and overhead expenses of running the business. So they do need the star items, but they've got to have cash cows because that's what a lot of customers originally come looking for. So management's priority, I think, initially should be to say, let's get rid of these problem lines as soon as possible, especially if they are last year's stock or bits and pieces left over from a purchase order, a bit like I explained to you, where the automatic reorder system had taken over. So the problem lines need to be cleaned out. Face up to the loss, get rid of them, I think, is the best attitude. But that's up to you to advise your client. And sludge, well, why do we have them in any case? I think your advice has got to be to your client, let's get rid of them. You might sell them to a second-hand dealer. You might put them on the internet, but let's get rid of them. Retailers need to be conscious of how they set up their stores. Now, you've only got to wander around the big stores, the Coles, Woolworths, Myers, David Jones, to see how they continually change around their stores. Why are they doing that? I think they're wanting to send us all on a bit of a treasure hunt to see what we can find. And invariably, they'll be putting star items near cash cows, because you may have gone on the treasure hunt to find the cash cow that you wanted, whether it's bread or it's milk or it's the newspapers or whatever. But alongside it, there's a real star. It might be fantastic ham off the bone, so it's in the refrigerated area, but the ham off the bone, perhaps someone there actually cutting it. It might be someone doing a cooking demonstration in the business. So the smell, the aromas, attracting people to that area. And you'd have both the star items that they're producing, but also the cash cows near there. So it encourages customers to move around. I've seen retailers, and we're dealing with SME markets here, and a lot of them really haven't got much experience in the businesses they're going into. There was a chap who I knew from a sporting activity, and he bought a retail store, a grocery store, you know, one of these 7-day businesses. So I used to walk down the hill from where I was living and go to his shop on a Sunday morning to buy the newspapers and buy a bit of bacon and perhaps some eggs and bread. Now, a lot of these items were cash cows from his point of view. You know where they were? As close as possible to where he was at the cash register. And I said to him one day, why you got all this around here? Oh, because that's convenient for the customer. I said, aren't you thinking about yourself, trying to make sales? Why don't you spread them around the store and put, if you got any star items, and it was the ham and the bacon and, because he was cutting ham off the bone and other things, good tomatoes and especially organic grown products that he was getting into his store and things like this. I said, your problem is, I think 60% of your customers aren't getting past your cash register on a Sunday morning. And yet you've got all these wonderful star products further into your store. No one's seen them, or not enough people are seeing them. You might get some impulsive sales if people were actually in there. But because you're serving them what they want, because it's, for some reason it suits you, why don't you move them around? And he did. And he told me a few weeks later, you can send your bill now. I said, I'm not sending a bill, but why? He said, oh, it picked up dramatically. I said, of course it did. You spread things around your store. You made people go on a bit of a treasure hunt. I said, you get any reaction? Oh, a few wins, but they keep on coming. You had a bit of a captive market, didn't he? People weren't going to get in their car or drive much further out of that suburb to buy their papers on a Sunday morning, but he started selling a lot more ham off the bone. And that was great because that was a good income earner for him. It was a good markup. So think about it. Now you need to get involved in this thinking if you're going to be giving advice to your clients on how they do this. So I think your role is to calculate the result from the various strategies that are currently in place. What are the star items? What are their markups? What volumes are we expecting to get? What gross profit's going to be generated? What's happening with the cash cows? Do we generate enough gross profit to pay for the wages, to pay for the overheads, and to pay for the net profit that we want? That's the exercise. And to be giving the calculation, not your role to sell it or to set it in stone. That's the manager's or the owner's responsibility. But they need some advice, because if you were working for that client on a full-time basis as the chief financial officer, you would be doing that. I was involved in a very big meat industry business, and we had retail shops, and I used to get involved in these sort of conversations, because invariably there'd be a loss leader. That become the cash cow. You needed it, but you needed to put other products with it in how you packaged it, how you promoted it, that had far bigger markups in them. And there was a real art to it. And we used to sit down and do the calculations and say, well, at the end of the day, if we sell it like you think it's going to get sold, that's what we're going to make. But so could you vary it? And let them vary it and come up with how it might work better. So I've already said that the placement of cash cows around a store rather than all being at the cash registers. What cash registers tend to be surrounded by are star items. You may have noticed, look what happens when children get near a cash register. There's various lollies, there's various other things that they love grabbing. So their parent then feels obligated, especially if the kid's eaten half of it, they've got to pay for it. Or they pay for it because there's a bit of a commotion. The child wants that particular lolly or chocolate or whatever it happens to be. So the supermarkets, the big ones, are quite smart with the way they do that. They don't put their cash cows there. They don't want to do that. They're quite happy to sell you stars, because they then see it as being an impulse item as the customer's leaving the store. Oh yeah, we'll have some of that. So you could have your very nice organic grown tomatoes sitting there for them. So I've talked about locating the star products in close proximity to the cash cows and promote the star products so you get people looking at it. Problem lines could be promoted the same way. They could be placed alongside cash cows to hope that people do decide. It doesn't really worry them if it's last year's fashion or last year's color or whatever. Part of the exercise that you would be involved in with your clients here is experimenting with various markups, trying to get from them, well, you're currently marking up this product by 80%. Could it be moved to 90 or 95%? Well, that's get rid of customers, or do you think it's still within a tolerable level. What are competitors charging? And then working it out and showing them what the impact, because of the volume of what you're selling in that product, will bring. Alternatively, it might be the client would say, no, volume would drop 5%, but you're talking about putting prices up 15%. What's the financial result of that? Is that a good trade-off? So you need to use the computer spreadsheets to be able to do these calculations. I don't think this is a job you do once a year either. I think this is a monthly, in some cases might even be weekly, but it's definitely a monthly job. You've got the results for the previous month. You're looking at this month. You're going to be guided by what's happened in the previous month. Did we make the profit target or not? Or do we need to make some changes to what's happening in the business? So I think you should be evaluating this monthly with the financial accounts, and then sitting down and having a business review meeting with your clients to make them understand, to sit there with your computer so you can do some final adjustments. Because a lot of this varies virtually day by day. And you'll see some of your retail clients changing prices quite regularly, especially big promotions. It might all be part of in-store promotions that are happening also. You know, what food's being cooked in-house today so that people can smell it and see it and taste it. It's all part of the exercise. Today, we've got cash register software, which will, based on barcodes that have been inserted on the products in the first instance, allows each item to be identified, what department it's from, what section it's from, so that individual detailed gross profit indicators, sales, gross profit percentage, are available as a printout each day, so that management can sit and look and see what's happening and determine what changes could be made. Because you should be able to reduce that overall target of gross profit into a daily figure to cover the wages, the overhead costs, and the profit that the business wants to make. I see this as being a virtual chief financial officer role. You and your team will be doing real accounting work, because this is helping your client at the coalface. It's helping them deal with their customers in an informed, smart way. And many of them will need input from you to help them. Because if they were a bigger business, they would have a chief financial officer there, and the CFO or one of their team would be heavily involved in this type of work to help management. So the aim is to ensure that the product mix that's being sold will contribute to the profit that in line with the budget target. If it can't be achieved, well, there may have to be a reduction in the budget target, but it's a lot better to have this getting highlighted month by month than going the whole year and then sitting down 4 or 5 months after the end of the year and saying, gee, we didn't get enough markup because we haven't generated enough money. It's too late then, all those sales are gone. Your influence should be, in my opinion, month by month, because you should be convincing your client that you're there to do a chief financial role. Take out the word virtual, it doesn't really matter. You're the client's CFO. You've then got to work out how you arrange the virtual arrangement. But there's a lot of work you can do. You can use Zoom to communicate, and you can use the computer system so you can interrogate results and keep on showing them what the effects are. So I'm now going to go onto our website and just show you where this material is, so that you are able to use it to undertake your review. So I've now gone to the screen and brought up setting retail prices. This is within the ESS BIZTOOLS package. So this particular package is within the industry specific advisory, which if we go down the left-hand side of the screen, it's down in this area here. Now, all these products on the left-hand side are included within the gold package, which we're now calling the advanced package. But our promotion at present is on the business advisory services starter package and the industry specific advisory and the retail pricing calculations is all within the starter package, and everything within the starter package is then reflected in the gold or advanced package. So that's why we're starting on this concept of having a weekly webinar discussion with you. We've started with the starter package because both gold and silver, as we were calling them, have got access to those products in any case. So what we want to do is bring up the setting retail pricing calculator. It's on an Excel spreadsheet. So we're bringing that up, and I just need to open Excel. Down the bottom, you've got the detailed components of the I'm having trouble getting that particular form to come up. So we're going to have to finish there, I'm afraid. I will come back to that and re-record that later on. My apologies.